What's up, everybody?
What is going on, Gary? What's going on, Chris? I'm getting tired of living through historical events.
Black Monday. This is Black Monday 2024, August the 5th. It will always go down in history as Black Monday for crypto. Dude, Chris, have you been like charting your brains out?
Yeah. You know, of course, we keep up with everything. And, you know, the one thing about, technical analysis is you don't say that it's just going to do one thing and that's all there can possibly do. So, you know, as I've talked with you, you know, every time we talk about it, we're always like, listen, we have to get beyond a certain level to kind of signal that bottom may be in. For us, it's been around that 72,000 level. We might even have talked about it as recently as last week, I believe.
Did you say 72? That seems like a long time ago.
Well, yeah, but this, you know, it's because you're looking at your highs and your lows, right? So you had your high at the all-time high, subsequent swing low, and then that was at that point was the next lower high, and then we had that lower low, that July 5th swing low. And we were looking to get up there, and we got close. You know, we got to around 70,000, but just couldn't do it. So until we actually broke that, as I was explaining, I believe it, like I said, at that time, we were in that bearish market structure off the all-time high. And it's possible we could go lower, which is what happened, right? Here's the thing, though. We did our thing. We had the big, everybody freaked out last night, right? And what happened? This morning, nothing's happened. Everything is going up, right? So if you look at the stock index.
Wait, Chris. Now, wait. Now, I'm looking at a chart right now of a miner that I own that traded from 370 Friday to $2.73 this morning. When you say nothing happened, and now it's going up to 350. It's literally had a 130% move in a day.
Yeah, no, what I meant was
in 2 hours.
Yeah, and so what it is what we should expect if things are really awful terrible is that when the market opened today, we should have continued to see U.S. jump in on all the selling, right? We should have seen because the U.S. was closed. Asia was open. They were able to sell. We opened up to gap downs this morning, which are being filled in. Coin, your particular miner you're talking about, other miners, the indexes, if you look at like the NASDAQ, S&P, all that stuff, RTY, which is the futures for the small caps, Bitcoin, all these things, they had their drop last night, but there was no follow through when the market opened this morning. And that's my big point, right? Everybody's freaking out online. You can see it. Everybody's like, oh my God, it's the end of the world. And everybody's got their reasons. I'm not sure that it is what people think it is, though. Right now, the big consensus seems to be it's the carry trade, the yen carry trade. And because, Bank of Japan.
Do you buy that? And if you do buy it, how big of a dollar value is that? Because I think that money's going to look for another place to go, right?
Well, it's huge, right? It's like, I think the estimates were around 4 trillion, maybe something like that, because, the yen, for all intents and purposes, has been basically a 0% interest rate for about 3 decades now. Now, there's been times in there where
Chris, just so the people that, I'm sorry to interrupt you, but for the people that don't understand, we use these terms, this yen carry trade. It basically was the Japanese were providing free money. Big venture capital guys, banks would use that money and then invest it in risk assets and take the spread, right? Almost free money. They've been doing this for a decade, right?
Yeah.
Almost a decade. Okay, that's what that is. And that unwound. The money's no longer free, right? So now they're freaking out. Everybody's going somewhere else. They've been expecting that money to be there. And so you have a flight to cash. They're looking for other cheap money. Is that effectively what's going on?
Yeah. So basically, when the Bank of Japan said, okay, we're going to raise rates 0.25%, all of a sudden the money wasn't free.
Was that last week, Chris? That
they
said they were going to raise them?
Yeah. And so the money isn't free anymore. So the story is, okay, if the money's not free anymore, you sell your stocks to get your cash to pay back your yen, right? And so that's what everybody's kind of saying what's going on right now. I don't know that I'm 100% behind that. just because, the strong reaction today, right? So again, with everything that happened on the weekend, when the markets open today here in the U.S., we should have seen continuation. We're getting the opposite. Now, it's too early to say, that it was just a flash pullback, a flash crash, whatever you want to call it, and we're going to go higher. But for me, I'm watching these daily candles right now. I'm watching how these daily candles close because they're, I think Bitcoin alone, I think is up something like $5,000 off that swing low or so. Let me see here. Yeah, just about $6,000 almost. So, we're getting a good rally off there. Structure wise, things aren't looking terrible. I mean, I think if this was a true panic event, what I would expect to see again would be continued jumping in on that selling when they got a chance the minute the market's open. I think it was maybe an overblown emotional response to what people are thinking of going, because we had the yen carry idea. We have last Friday we had the unemployment come in, right? It jumped up to 4.3. Everybody says, oh, SOM rule now, which, may predict a recession incoming. Wouldn't be tomorrow though, right? And then we have, everybody's been talking about recession for the last few years. And so now that's there. And then on top of it, if you're in social media, you've had everybody talking about the cycle top for Bitcoin and whatnot for, months and months and months now. So I think all that together gives us a lot of emotion. And I think that just pushed it further than what we might have seen. Because again, I'm just not seeing the follow through yet. Now, again, that could change. But right now, it's looking pretty interesting, the rebound off the swing low at the moment. So really interesting how the daily closes.
Let's talk about that for a second. So I would expect the audience is probably sitting here going, oh, wow, I need to jump in and buy this thing. I would just calm down, take a breath, because if I'm right, this market should actually get tested here, right? In the next hour or two, it should, hey, it's 54.6. I mean, to your point, it's moved from 48.9 to 58.6 in an hour. That's a pretty big move. Would you expect this to test the 50,000 again today?
I think it's definitely possible. But here's the thing. We had the big, strong drop. And so sometimes what you'll get with those is a strong reaction back in the other direction. We would normally expect a pullback and retest, give us another higher low. But it depends on how people really kind of pile in here on the bid here, because we've got some big candles that we can just kind of work our way right up through if we're looking at the daily. Again, this daily candle just looks crazy right now.
You want to put it up, Chris? I can help you.
Let me go ahead and
present. I figured you had 37 charts today. I thought this would be all you, actually, chart day. Chart day with Chris. Well, sometimes it's more fun to look at charts than other times, right? This would be one of those times. And everyone's trying to put a narrative together on this thing.
That's
I think the narrative is it's the most liquid asset in the world. And when the shitstorm shows up, people are going to sell anything they can to get ahead of it. Not long-term holders. We're impacted by these moves, but if we just understand this is a different movie, right? It's a different movie. It doesn't matter really what happens during the, series 3 and 4. The Bitcoin's still going to be around. It's going to be around for many series to come. It's going to do episode after episode. And there are going to be times like today when we see Bitcoin being used as an instrument of liquidity, like an instrument of war. If you were in a shitstorm, you're going to pick up the weapon that's the lightest and has the biggest rounds to it to defend your position. And that's what's happening here, right? Yeah,
exactly. And, a lot of, retail traders, unfortunately, are going to come in here and they're going to be like, oh, look, people were wrong, people were right. And, they'll go back and forth with that. But at the end of the day, the global financial system is so crazy. It's so interconnected that it's really difficult to understand all the time exactly what a specific move is doing, right? What kind of effect are we having on this? You can have people come out with different plausible reasonings for what's going on. And many of them are going to be wrong, you know. And that's why I tend to try and watch the charts rather than so much worry about narratives, because narratives, you know, you've got a lot more chance of misunderstanding what's being said. But if we're looking here, this pullback, if this count ends up being correct here, where we're just where we've got a 1 and a 2, and then if we look at that, wave 3 should get right about 1.618. We've got a 1 and a 2, and we do that right here, just shy of that. And then we take that wave 3, we measure that out, and we get a 38.2 pullback for wave 4. So wave 4s, we usually look for 38.2 first, and then secondary would be 50%. But, you know,
50% would put you at where?
Right around 42,877.
Oh, this is the number everyone keeps referring to. Okay, got it.
Yeah, yeah. But right now, here's the interesting thing. If we're looking on the charts, we've pulled down into what we call a low volume node, which is, it's just an area where the price hasn't been tested much in there. The market's not really interested. And that's why often when we hit these, you'll see these large wicks back up. We even had it right here where we hit this low volume node on July 5th and gave us the rally back up there. But again, today's candle, quite the long demand wick showing up here. So, and by the way, notice throughout this range here, volume continued to drop off all the way. The only volume increases we had along the way really were at the swing lows, which shows us demand is showing up. And then we have this capitulation here with this large volume. And so to me, this is really compelling. When you have a range and you're just not getting expansion of volume, but you're showing volume showing up at the swing lows, which again is, it's showing you that there's no real selling going on at the tops. But there is buying going on at the lows here. And that really gets interesting. That really gets fun, especially when you do this and then you get this kind of breakdown here with this large capitulation volume, and we're closing back up. So here's what I'm looking at for the daily here. I'm looking at two things. One, if we close up above this July 5th swing low here, that's what we call a bullish SFP, swing failure pattern. And we should expect, like we did with this one right here, when we had the May 1st swing low, and then we drop below it on July 5th here, we should expect to get a rally back up. So we're doing that again, potentially right here. The other thing I'm interested in is, can we even get close? Can we close here above the S1 pivot at around 55,400 or so? If we can close there, now we've got this, what we call a pin bar, and we say that the S1 pivot held this support because it only wicked below it. And not only that, but we have this huge, huge, huge demand wick. And so, you know, when you look at all these things together, that paints a really bullish narrative. So for me today, what I'm looking for is, do we close above, first of all, July 5th? And even, and more so, do we close above the S1 pivot here on the daily? Because if we do, I think that's a really strong indication that the low is probably in, and we're going to break out higher from here. As far as
Chris, why does this channel back to, I don't know the date, but why does this channel look like it's pushing downward? You know, I'm not a chartist, but I look at that and go, hey, is that a trend that will continue, which looks bearish to me? Or are you suggesting it just needs to break out of this channel and it forms a new one?
Yeah, so this is what I was talking about. It may have been the last time, last week when we were talking, may have been the time before, something like that. But this is where I was talking about where we have this bearish market structure off this all-time high. So we have a high, we have a low, we have a lower high, we have a lower low. And so that gives us a bearish trend, bearish market structure. And so off this low, we were looking for a breakout above this last lower high, which is right there around that 72,000 area. And we didn't get it. We got close, we didn't get it. So because of that, this bearish market structure continued in, and we just made another lower high and lower low. So as far as the market structure goes, this is bearish market structure. If we break out above this last lower high here, which is now at this 70,000 area, that's going to say, okay, well, this bearish market structure is now broke. So instead of having to look up here at around 72,000, now we can look here around 70,000. But yeah, you know, again, it's a downtrend. It's a bearish market structure off that all-time high. The only thing that breaks it is that breakout above that 70,000 area now on that. Until then, just looking at this big picture, kind of macro look at this range, we could still go down further until we break out above that. We break out above that, then the bottom is likely in, and we head up out there toward that 95, 100,000 area next stop.
And if it doesn't, where does it go?
Okay, so yeah, so if we continue going down,
this is the battle of two tails, right? It's going to do one or the other at this point.
Yeah, exactly. If we break down, again, my next target area is this 42,877 or so on this chart. That would give us a 50% pullback. And again, I'm looking at that not because I have any particular bias or anything, but because if we count the waves, we go 1, 2, and then we go 3, 4. Again, wave 4 initially has a 38.2 retracement. Secondary target is always a 50% retracement. So that's just generally where we look for targets to get to. But right now, this looks like a more complex correction here, what we call a WXY. So that's an ABC down, ABC up, and then ABC down again. And I mean, again, when we put all that together, a lot of stuff suggesting that the low is quite potentially in. But we do need confirmation of that. And if we're looking at the big picture here, that confirmation is that breakout above that 70,000. Other things I'll look at, again, for me,
seems like a long way to go. If I'm a Joe residential trader, I'm like, whoa, 58 to 72. That's going to take forever now. I feel like I'm constantly going backwards with Bitcoin. I'm always buying the highs, then I get tricked and it goes down $10,000. Everybody's so bullish, but it's still like nobody gets it. Nobody can fix it. And I feel like I'm the idiot, right?
Yeah. Yeah. And a lot of retail is going through that since last night. A lot of them questioning trading in general, questioning markets in general, thinking it's all, manipulated and whatever. But that's just the way people feel. It's emotions. When you're involved with something that you don't understand, right? You don't understand what may be going on there. You don't understand all these policy implications, what they may or may not mean. And then you've got everybody constantly, especially with social media. Social media is the tough thing. I can't imagine having started my trading career with social media. I mean, emotions are tough enough as it is, but then to have the all that constant negative emotion on you, it's hard not to believe it's the end of the world. But again, we go back to, and you step back, and I've made a lot of posts last night and into this morning because I'm trying to hopefully help people relax a little bit and go, okay, listen, it was a big move suddenly, but let's kind of zoom out a bit here. What is the bigger picture? What's really going on here? At the end of the day, at this point now, we're basically where we would normally be in any other previous Bitcoin cycle in terms of pullback at this potential time and everything, 100 days out from the halving or whatever it is. This is basically where we would be. So if we think in terms of what we normally would expect in Bitcoin cycles, we're just where we would be. But again, it's all that overhang from all that negative stuff going on, cycle tops, everybody screaming cycle tops, everybody screaming, reverse of the yen carry, which, again, most people don't even understand as it is, recession. And that just makes it really difficult to kind of zoom out to the bigger picture and really kind of look at what may be going on. But that's why I said, listen, I'm interested in what today's candle prints. Right now, it's looking absolutely fantastic. It's what you want to see. And most of the time what happens with this is we get these big events that scare people out. And this happens in Bitcoin a lot and crypto a lot. And this is the point, this is the washout, and everybody's scared out. Oh, I'm done. And then they regret it later because price ends up going up, right? So this goes back to what you and I talk about constantly, Gary, which is if you're in Bitcoin for the long term, if you're in Bitcoin for years out, you shouldn't even be paying attention to this. You shouldn't even be looking at this. It's going to end up being just a blip in the chart, 2 years out, 5 years out, 10 years out from now. So, if you're a trader, well, there were times to go short along the way, right? But the big picture, what I'm usually talking about, it's just part of what's going on, right? There's nothing overly shouldn't be overly anxious for us when we look at it, if we understand, how price moves and whatnot. So that's kind of where I'm at with it as far as Bitcoin goes.
Now, that's a lot of rational, sane thought, but at the same time, my brother just quoted that there are like 8 different exchanges that have been paused or broken. It's not really very comforting when every major stock market, equities market, commodity market closes on a day it's not supposed to be closed. And that's effectively what they're doing. They're just shutting down these markets. That tells me they're terrified of something. That gets me really nervous, Chris. What do you have to say to that?
I haven't looked. I just saw it like right before I came on here that was doing. As a matter of fact, I reposted it as well. Charles Schwab and a few other platforms down. We'd have to see why are they down.
I mean, it's just not Robinhood though. There's 7 of them, dude. It's Schwab, it's Ameritrade, it's the biggest players in the world. Is Coinbase working? It looks like it's working.
Yeah, that was what I thought was kind of funny, because in crypto we deal with this every Bitcoin cycle. We always have a few times where all the exchanges go down when there's strong movement, and all of a sudden we see it in TradFi now.
The problem with crypto for me is I've seen that you can get out when the price is fucking collapsing, but buying sometimes is hard when the market's going the other direction. It seems to break when you really want to, slave into the market. And like that the global stock markets are breaking says to me there's some problem. Now, I don't want to necessarily say that, but it's pretty obvious to me, man.
Yeah, again, when we look at charts, the pullbacks are, similar to Bitcoin, right? We can look at it and go, it's looking like a wave 4 pullback. I think we just get so used to that. It seems like it's been going up forever now. I mean, we had that longest ever secular bull market from basically coming out of the lows there, Q1 or so of 2009 up until the pandemic. And then we had that flash drop down and then right back up, right? COVID came in, we did the drop and then back up. And we've been in another bull market since then. We haven't had a really extended kind of, recession or anything since 2008. And prior to 2008, it was 2001 when we had the dot-com bubble. And so we had this extended period here where it seems like market just keeps going up forever. And the one time we really had it where it went down was COVID, where it dropped quick and then right back up. So I think that kind of makes it, when we look at the markets now, feel like what's happening is really, really, the end of the world, the top is in. And it may, I can't guarantee it's not, right? But when I'm looking at it, we don't want to sit and say, okay, the top's definitely in, because it may not be. We don't have any confirmation of that yet, which is why, again, the opening today, seeing that we weren't getting that immediate selling at the open, that's interesting. The fact that we're getting the pushback up. So again, we want to kind of look at these daily candles and see how they're playing out, because it may very well turn out this was just one of those, shakeouts where people got scared, got shook out for price takes off.
Chris, by the time you get confirmation though, won't it be too late? Like when you're looking for confirmation on these charts, isn't it like, so what I'm having trouble figuring out is being like the emotional side is everywhere. It seems like, hey, this doesn't normally happen, right? We're looking at things that don't normally happen. And when I'm expanding out on the macro picture, like Japan raising interest rates also doesn't normally happen, right? So we're breaking all these things that it seems like the system was not built in for. So I feel like, I guess I'm just more worried than you are that this might be terrible. What if other countries now get into some kind of interest rate war with the Japanese, right? Are we going to raise our rates because the Japanese are raising their rates now? And what will that look like? What does that mean for competition as far as, currency war? Like these little things, this doesn't sound good. And it also doesn't sound like it's a traditional shakeout. Like, does a traditional shakeout involve all of these markets collapsing, or all these all these exchanges shutting down? Is that what a shakeout looks like?
All right. So a couple of things. One, everything's basically interconnected today. So you've got players that are in, that are in currencies, that are in stock market, that are in crypto, and it's all part of their big thing, right? And so a lot of what's going on there is also driven by algos, and algos that they listen for news events online, and they kind of parse the verbiage, the verbiage that's used, and then it's graded. And if it seems bearish or whatever, the algo sells. If it seems bullish, the algo buys. And so it's not just across one market; it's across all markets that are involved. But I think the bigger point, the one you mentioned, there's a lot of people worried about, is this whole thing with what's going on in Japan. And the Fed's going to have emergency today, and they're going to raise interest rates. But at the end of the day, this is something I've been talking about for a while. The U.S. can't just go out there and willy-nilly do whatever it wants, right? The USD is such an integral part of the global financial system that it has repercussions on other countries, which means it has repercussions then on U.S. treasuries. So it's a really big interconnected thing. The Fed just can't go and go, oh, well, we're just going to go ahead and slash rates, emergency cut here, blah, blah, blah. If what's going on in Japan is what's going on, because that's going to have a big effect on Japan and on the yen and what's going on over there. And so when we're looking at this, it's a really big, just a really integrated, really complex system. And so when we look at that, I don't know that, for instance, the Fed goes and has really a reason to cut rates today. If it's an unwinding of the carry trade, that's not us. We didn't do that. That's that build up over time because of what Japan was doing. So I think it's a lot harder to make the argument that they do. I'm not saying they're not going to, but I think everybody all of a sudden their first thought is bad news comes in. Now the Fed's going to go and they've got to cut rates, period, end of sentence, and they got to cut it by huge. Five interest rate cuts by the end of the year. Could happen, sure, but I think we're way too quick thinking that's what's going to happen, because if this is due to the yen carry trade, then it's a different reason than, say, why the Fed cut when we had the GFC, or why the Fed cut when we had dot-com bubble, stuff like that going on. So, not everything is created the same. Not every recession is the same. Not every market movement, even though it looks similar, is going to be the same. There might be different underlying reasons. And so I think everybody just jumped on real quick last night and into this morning, because again, I think it's just, years of, recession and not materializing. And finally they're like, look, now we got the breakdown. Now we can do it. And I'm just not convinced just yet. So in answer to your other question, Samuel, about, is it going to be too late by the time it confirms? Well, this is where you have to understand what is your time frame, right? So we're talking about big confirmations. We're talking about big market movements, right? Recession. So this is big macro stuff. So yeah, it's going to take you a little bit to kind of, a bit of movement to get some confirmation on that. You're not going to figure it out within, 5% of the all-time high. You can guess at it and maybe you'll be right. But if you're looking at that big, is this a recession coming in? Is this the top coming in? Then you have to absolutely zoom out to that much, much larger picture, that weekly maybe, and go from there, which means you're going to have bigger swings to confirm, because you're talking about, multi-year movement, confirming the reversal on that.
So Chris, go ahead, Sam. No, go ahead.
Well, just two quick follow-up questions. Do you think this could change what the Fed does as far as rates go in September? And then second question, do you think this bad news is in any way unique to previous bad news, like when we've gotten these shakeouts? Like, is anything about this situation unique to you?
The only unique thing really here would be the reversal of the yen carry trade. That would really be the only thing. Other than that, what do we have? We have potential unemployment stuff going on. But again, historically, anything around 4%, 4.5%, 4.3% for unemployment historically has been considered full employment. So, it's this big, oh my God, we're at 4.3%. But historically, that's been full employment here in the U.S., right? So that kind of makes it hard to say, well, we're going into a recession with basically full employment. It doesn't make a whole lot of sense, right? If you say, okay, well, Fed funds rate, where are we at? Well, historically, we're just below average. Historically, Fed fund rate's around 5.5%, 6%. We're at 5.25%, 5.5%. So again, we're talking recession, but Fed funds rate and employment are, below where they historically are on average, and at potentially full employment. So, people use that as a talking point, but when you step back, does it make a whole lot of sense in the grand scheme of things? Maybe it works out that way, but again, it's not as clear cut as, say, if we went from 5% employment to 5.5% unemployment, right? 5% unemployment to 5.5%. I would be a lot more concerned at that point. Or the Fed's fund rate, was at 7% or something like that. But when we're at these averages or below the averages, to me, more has to happen to kind of prove it, right? It's at that point, it's like, okay,
Chris, I agree with you because I think there's a lot of capacity to put people to work. I don't think people want to work. Okay, literally, I don't think people want to work. They like what they're doing. I was at restaurants in Tampa this past week. I was in the International Mall, which I have seen fucking empty, dude. Like empty for 2 or 3 years. Nobody's spending money. This fucking place is full of people, dude. Kids, moms, dads, nannies, girlfriends, and everybody's got their plastic out. I don't see a recession, okay? I see people spending a shitload of money, and they're sitting there going, wow, I can't afford a house because the HOAs and prices went up 20%. First off, they shouldn't even own a house ever. They should never have owned a house, but they're actually looking at it going, well, I'd have to work a little bit harder, and I don't want to work that hard. And I don't see anybody. I did a survey. I don't think anybody's working 40-hour weeks anymore.
Yeah.
Okay. Only the 1%. And we're working 100 because it's so exciting and fun. But I think more importantly to the question, to most people that are listening, are you buying here? Like, would you look at this move and go, wow, we've had a $10,000 move, $9,000 move down. Would you be picking $1,000 of Bitcoin up or 2% of your portfolio? What would you be doing right now?
Yeah. So based on the count that I was showing there, yeah, definitely, you take a chance at that low there, you stop loss just a bit lower. You don't go all in. There's something to be said for coming in tranches, basically, right? And same thing with exiting the same way. But yeah, I mean, I think that was the opportunity to buy around that 48, 50,000 level. 50,000 is a psychological number, kind of like 100,000, kind of like 60,000. So yeah, I think that was definitely an opportunity to buy. And had you done it, you're doing really good this morning. You're up about 10%. But again, in the grand scheme of things, we still need that confirmation. We still want to see how that daily closes. But I think what you look for, if you're not in, I think is you look for the pullback now, right? So you look for us to kind of stop the rally and pull back. And if we can get some rally back off that, you can zoom in on a smaller time frame or just look for a breakout above whatever, say where it closed today. And if it pulled back tomorrow and the next day, and then back up, above where it is today, where we break out above that swing high, that's what we would be kind of looking for, right? You look for more confirmation. Because at the end of the day, if we're right, and this was the buy here, and you're getting in somewhere around 50, 60, 65,000, you've got an elevator ride up to, 95, 100,000 at least before the next potential top should come in. And so you've got a little wiggle room there. You've got a little bit room to kind of allow yourself to have the ability to confirm what's going on. And I think a lot of people don't do that. I think a lot of retail traders, they get in there and they just kind of blow everything right at one point. They're just like, oh, I'm all in here. And I hope it's going to do what I want it to do. But with trading, you can't do that. With investing, you can't hope, right? Because you're going to lose money, left and right all day long.
Yeah,
So
hope's
definitely
not a
confirmation.
strategy in anything.
Yeah.
In particular, hope is absolutely not a strategy in anything. But when it comes to investing, it can be really painful. Well, the truth is, it's painful in any activity you do. It's just when you're doing it with money, you see it quicker.
Yeah, exactly. But so you get a lot of people, going down. A lot of, I'm hearing, things about certain firms potentially having blown up with this thing over the weekend. I see Grant's over there. He's saying 9,000 car dealers evaporated overnight. Yeah. You're going to see the effects of this, right? Because again, everybody being, whether it's over leveraged or whether it is just not positioned right, thinking that things are going like they're going to go forever, not really positioning yourself for in case it doesn't, it pulls back, and then of course all the other ailings we have with the economy that we've had since the whole pandemic thing. And so here's my big thing. When we look at things today, when we look at employment today, when we look at the markets today, there is a significant difference between what it was pre-pandemic, right? We can look at gig workers, the rise of gig workers. We can look at the, I think we had 4.3 million unemployed, part-time workers prior to the pre-pandemic there, 2020, 2019. And right now we're at 4.6 million, I think. So we're up a little bit, but during the pandemic, we were up at 10.1 million as far as part-time goes, right? But I think the bigger, more interesting thing is Bank of America, Goldman Sachs, everybody's talking about content creation, right? Content creators. And they're all starting to lean toward this by 2030 or whatever. It's going to be like a normal everything job, right?
Yeah.
You and I just kind of fell into this because it was part of whatever was going on there. I don't think either one of us really came on here to do this thing, but we do it as part of the business. But apparently this is going to, there's a lot of belief in this is going to become a legitimate job that is going to be just as normal as any other job in 5 or 6 years. And so when we look at that and we look at what percentage of the population are actually consider themselves content creators as a full-time job now, this all changes everything when we look at it. So when you look at that, all that kind of thing, and then you're looking at the Psalm rule, which supposedly indicates a recession, there's a lot of questioning of, because the employment situation and the economic situation right now is different than it's been in the past. Is that which is based on what happens in the past really going to be able to predict it this time around? So it hasn't been wrong yet, but again, things are a lot different since the pandemic than they were prior to it. So it's going to be interesting to see how it all kind of plays out. I'm of the camp that we need to see a bit more confirmation to think that the top really may be in.
I'm always curious to see when the Berkshire Hathaways of the world activate their cash positions, which just seem to continue to grow and grow, which I guess this is not the time that they're going to do that. But they can't be in cash forever, right?
Well, you would hope not. The goal of what they do is to make money. And if you're sitting in cash, you're losing money. It doesn't matter.
Is that the sign of the bottom when Berkshire Hathaway starts buying everything? Is that the true bottom?
That's where we would normally look again, right? But again, we kind of look at this and go, well, things have been generally the same, more or less, for, Berkshire Hathaway's existence with Warren Buffett at the helm there. Are things different now? Is he getting it wrong? He's not a fan of Bitcoin. Doesn't buy that, right? I can see him, I can see a reason for selling such a large position of Apple that they held. Apple's kind of stagnated, but yeah, they're sitting on just a ridiculous amount of cash right now. And so what you're looking for is for them to deploy it. The whole idea of pullbacks is to have cash so that you can buy in and get that next run up. So yeah, Chris, watch what they're doing, see what they're doing there.
Can you tell me why the Japanese decide to raise their interest rates after all this time? What was the specific reason? Do you know?
I didn't catch what the specific reason was. But, again, when we're looking at, we know they had to intervene here a couple of times as the USD yen was rallying up here to 150 and getting above that. I'd have to look back in that. I've been too busy to really keep up with it all at the moment. But yeah, there's with what's been going on with their debt, the Bank of Japan owns a whole bunch of basically I think most of their bonds and whatnot over there, kind of like the Fed over here, having ours. The interesting thing about the yen, about the Bank of Japan over there, is that they were really the first ones to kind of do the quantitative easing thing, right? As we got into, the lost decade in the 90s there. And so the things that the U.S. has done in terms of quantitative easing, come 2010 and then again coming up, pandemic area, have been based off of, a version of what Japan was doing back then. So, we kind of see that happen there. And then you see Japan kind of sitting where we are, where it's just a lot of stagnation, right? They're really not doing much in terms of, they're like, financing all this debt consistently. And so now we kind of sit here and we're like, well, with what's going on now and with their inflation, with the cost of goods and whatnot going up over there, it's just a response, I believe, with all of that coming in, just kind of coming to a head right now. But again, the U.S. dollar itself can't do whatever, the Fed can't do just whatever they want for the U.S. because it is going to have that broad implication across, especially Japan, and a few other notable world, big countries out there that are going to really kind of give you that magnification of the effect of whatever the Fed does. So it's kind of it's the way everything is so interconnected is really just gone crazy over the last 20, 30 years, especially.
Maybe we pivot a little bit. Sam, what's been going on politically all weekend that would upset this apple cart? There's a lot going on internationally. There's riots in the UK, not one or two, but like almost every city. There are people arresting English people in the UK for putting something on Facebook, literally walking into their door and saying, hey, we're arresting you, taking you to jail because you published something on social media that was against our rules, whatever that means. I thought the internet was a global tool. And we have so much shit going on in the United States. It's insane. I can't even keep up with it all. That's why I have you. So tell us what's going on, bro.
It's so funny to me because anytime you look back in history, you're always like, wow, it's so obvious World War II was going to happen. Look at the buildup, right? And then you live in these periods. And so that's what I'm always trying to figure out, because even back to like what's going on with Japan, I'm like, okay, is this going to be the needle that, or the whatever that broke the camel's back and create a currency war because they're trying to prop up their currency and stop inflation, which they haven't been able to do? Like, how's China and the rest of Asia going to react to that? And it's affecting our market. And this doesn't even factor in. I mean, it's a totally separate issue than the war issue, right? Like, we've had since October 7th, a quiet, I would call it quiet because nothing severe so far has happened to where there's nothing nuclear, but just buildup of real war in the Middle East, right? Notice how we're not even talking about Ukraine anymore. Like, Ukraine isn't even a big headline, right? And this is all on top of, we have 91 days now till the U.S. election. And also stuff's happening in Venezuela, right, with their contested election, right? So that's why I'm like, okay, there's already all these fractures happening in the global financial system, in the global geopolitical system. And Japan's always kind of been one of those countries that, when things are boring, that's a good sign, right? Because you want Japan to kind of hum along. So now things are not boring in Japan, which is supposed to just kind of be the apex of stability, right? And now seeing them go through what could be a crisis, I mean, what else do you have left as far as the cracks in the dam go for the old system to just start completely failing, right? I just don't know what the answer to that question is. And I know it's complicated because you factor in, for example, the euro dollar system. Like, I agree, everything's interconnected. The Fed's job is now not just maintaining the U.S. economy, but the world economy, right? Whether we like it or not.
Yeah, that's impossible, though. They can't even control
correct.
their own.
No, I know.
See,
I don't know.
This interferes with the basic thesis of markets. You don't intervene. And so what we're doing is pushing the bubble all over the place. This makes it very difficult for Joe Domestic to invest sanely, like, because you don't really know what the game is. I mean, I actually think this, I won't go there right now, but I just, I don't see anything improving here until we have a breaking point. Because I don't see anybody in charge, man. And the people that are in charge are trying to control something that's impossible to control.
Yeah. Well, when I saw Grant's comment on the 9,000 car dealerships closing, my immediate thought was, oh, those are all middle income, middle class jobs. I mean, most car dealerships are, or a lot of car dealerships are family owned businesses, right? So I'm like, okay, great. And that's very anecdotal. I just know a lot of people in the car industry business. So I'm thinking, okay, great. So now is this going to hurt the middle income earners first before it expands out to anybody else? Because that's not a good sign, right? That's not something that to me sounds like it's very bullish at all.
Yeah, I don't know where Grant went, but I don't know how to invite him in here. I'd love to have his view on the 9,000 and then also talk about, hey, what he's seeing on multi-dwelling. Because notice commercial real estate, we don't even talk about anymore. 2 months ago, commercial real estate was going to destroy the world. And now we're talking about nuclear weapons in Iran. So I'm having a hard time keeping up with it. Hey, is it, I don't see anybody. I mean, the car dealers, if there's 9,000 car dealers, that's too many car dealers. I mean, that just makes no sense. Looks like I'm going to lose my, I've lost my camera, but let's just change it here. So Grant, if you're around, would love to have you come in and chat with us about this, or maybe later. Sorry, Sam, I lost you there. Oh, did you move?
I'm going to drop down. I'm going to come fix it.
Okay. Chris, where do you see things going this week, buddy? Since it's clear, even from the political response, there's not really anything he can say, right? We're in chaos, and I'm not sure all this chaos. Bitcoin's still going to be here. Gold's still going to be here when this is over, and silver's going to be here. The rest of it, I don't know. But I'm certain Bitcoin, gold, and silver will be here after whatever the fuck is happening. Happens, comes, and goes. Just like this little hurricane. I didn't even know I was in a hurricane. I literally did not know. I'm prepared, so I don't have to watch the news about where's the eye of the storm. It's like, hey, if it knocks my house down, it knocks my house down. I don't think it's gonna. I mean, it's gonna knock a lot of houses down before it gets to me. Yeah. So there's some things I just can't worry about.
Yeah.
And that's why I'm in gold, silver, and mostly Bitcoin, right? Bitcoin is perfect for this scenario, isn't it?
Yeah. Yeah. And I mean, the big thing we always get from people is, oh, well, if the internet goes down or whatever, your Bitcoin's going to be worthless. Well, yeah, if it goes down, so are your credit cards, so are your bank cards, all of it is going to be, it's not like it's, something special to Bitcoin, right? If you've got cash, you're going to be, that's what you're going to have to deal with, but there's not going to be any electronic payment system in there. So, if you take out that nonsense retort as far as Bitcoin goes, yeah, I mean, it seems like this would be the thing, right? And everything comes back up eventually, and then there's Bitcoin there. Interestingly, gold and silver are down. You would have thought with what was going on, if it really is this big, terrible thing, you'd think maybe there'd be this run to safety, right? But no, everything.
Dude, I was on a space with Melker this morning, and somebody, a really smart guy there, I actually wanted to invite him here. I'd never met him. He's like, hey, I think gold and silver are going to outperform. I'm like, I don't see them outperforming anything right now.
Yeah.
It's kind of weird to me, because I would have thought gold would be moving here, man. Now, a lot of people say, well, it's already moved. Dude, it didn't move in preparation for what's happening right this moment.
Yeah.
Right.
Exactly.
I agree. It did move the last 5 years, but not really that great. I mean, it's moved. It's at a high. It's seen its high, but it's doing diddly right now. And you would think it would be a bit on.
Yeah, if you believe in this idea of gold as a flight to safety, and then you believe that a lot of what's being said here, about what's going on, recession, all this stuff, yeah, you'd think people would want to be moving into gold and whatnot, but we're not seeing that. So, it kind of, again, makes you go back there and go, okay, well, am I just hearing in social media, am I just being exposed to echo chambers of a certain type? Am I just being fed what the algo thinks that I want to hear? And then things all of a sudden look, maybe worse than what they are. Again, I'm not saying they're not bad, they're not whatever. I'm just saying, but we're at the behest of these algorithms on social media. No matter how hard we try, we're going to be filtered a certain type of conversation based on whatever we've said, whatever we've looked at, whatever we've written, whatever we've read, that the algo keeps track of. And a lot of times it's off platform as well. So, we get the most extreme, I think, versions of whatever it is we're getting shown because that keeps us on the platform, right? And that's how they make their money. They keep us, the longer that they keep us on the platform, the more money they make. So yeah, again, everything basically took a hit. And then there was no follow through again so far today. It's been a bump in the other direction. So we see how today goes. We see how it closes out. And from there, we look and that's the first step. How does today close out? And if we get the close, for instance, like I was saying there on Bitcoin, where we're closing, especially above that S1 pivot, that's a pretty bullish close. And with that volume coming down there, especially again, we had that whole range where the volume was just dropping off the entire way, and it popped up a little bit at those swing lows. But at the end of the day, we got the big capitulation volume on this current daily candle. Often that's just that move that's done there to freak people out. When we look at it, that's
Chris,
the move.
One other chart. Could you bring up the Solana chart? I noticed this, and then someone else made a comment today that Solana seems to be the canary in the coal mine. Look at this chart. This is like really impressive. Could you buy that? Could you buy that? Solana seems to be the thing that's moving relative to how the rest of the market's wanting to move.
Well, we'll see here in a minute if TradingView loads up my chart here.
Yeah, they're all a little slow today. You hadn't seen this correlation, or you hadn't heard this? I could be just picking.
This obviously didn't work out there, but no, I hadn't heard about that. But even with this right here, what do we have? We have the same basic idea of what's going on with Bitcoin, other than we have a high, we have a low, we have a lower high, but then we have a higher low. We got a higher high, right? So what do we have? We have a high, low, lower high, lower low, and again, volume dropping off throughout the range. Only really picks up at the swing lows here.
Dude, look at that volume.
And then we have this.
What does that volume show you in 2 hours? Is that like impressive or what?
Oh yeah, this is great volume. If we look here, it looks like that is probably the biggest volume. Yeah, that's the biggest volume we've had since way back over here on biggest daily volume, and the day is not over yet, since we've had on January 14th, 2023. This candle right here.
2 hours of volume. I think people don't really fully appreciate. Well, maybe 4, 5, 6 hours, but it ain't a full day. It's not even close to a full day.
Yeah, and again, same thing. Looking for on Bitcoin. Does the daily close above the S1 pivot? Also, we have right now we've got this big close up here, so we've got a bullish SFP below the swing low here. In terms of the range, if we're reading it with Wyckoff, this becomes what we call a spring, which should be the low of the low, and then you rally and break out higher. So a lot of different things when we're looking at this, really kind of suggesting this may just be the spring here, and we're heading up. Kind of similar to what we're looking at there on Bitcoin with that drop. So, I would probably have been a buyer on this dip below here.
Dude, 111. It hadn't seen 111 in a while. More importantly, it just got through doing 181. I mean, that's a big move. That's an 80% move if you could pick it up at 111. I wasn't able to do it.
Yeah, look at that. Oh man, that's beautiful.
Yeah, huh? Isn't it? I mean, that looks
I
like
mean, right here. Yeah. I mean, you know, it hit the mid-range of this demand that was still sitting down in this wick from the March 5th of 2024. It hit the EQ of that. That's usually an extremely bullish signal. When I see something like that, especially when we have this kind of drop in this volume and everything else going on here, you know, again, it's that series of events that are all happening around the same time that kind of get you this idea that, you know what, that looks like quite potentially a bottom there. We're looking to, you know, rally up higher off that. And so, I mean, it just looks great.
Yeah.
I mean, that's a nice look. I gotta be honest, a great looking range right here. Especially with this. So.
I had a feeling you would dig it. I was looking at it earlier this morning. I'm like, wow, man, this is capitulation.
Yeah. I mean, it's exactly what it looks like. And the fact that you have, and I think most retail traders miss this, but the fact that you have this particular candle with this much stinking volume, and, you know, again, depending on how today closes, the fact that you have this huge lower wick, this is demand showing up. What this means right here is you had supply coming in strong to break down below the swing low here, below the range support. And it didn't get far. It barely got anywhere, rallies back up, and you can see all the supply coming in because demand's fighting it. How do we know demand's fighting it? Because of the big move back up the wick here, leaving this long lower wick. So this is supply really trying to come in hard on you, and demand just saying, no, sir, not today, rallying back up. That is significant when you're looking at price action and volume.
Yeah. Maybe we should end the show that way because it's kind of ending on a positive note. Everything else, like I've been in some of these rooms this morning, I'm like, my God, man, everybody's so negative. And understandably, okay? I mean, I think the world is in a world of hurt right now. Quite frankly, the world of hurt is so significant. Unless you think they're going to take it to the next stage, it has to calm down. Like, I hope these people aren't absolutely crazy, but we are at a point where you're like, man, can this go? You know, what else? You know what I'm saying? I mean, it's just like, these aren't black swans yet. These are real swans, man.
Yeah. It's again, you know, we had an overnight freak, you know, panic that did not materialize when the markets opened this morning. And that is significant. You know, if it truly was this terrible thing that everybody's thinking it was, and again, you know, it could still be, but we're not seeing what we would expect to see in that event. We're not seeing that continuation this morning when the markets open that we should have seen.
Where would you have thought it should have gone to with continued testing?
As far as which chart?
Well, Bitcoin.
Oh, Bitcoin. Yeah, again.
Whatever, right? Bitcoin's going to be the baby. Everything else is going to move around.
Yeah, well, right now it hit the 38.2 retracement. That's what I was looking for initially. I think I posted a chart last night on Twitter, alerting people to what I was looking for with that breakdown. So yeah, I mean, for me, I would just look at that. I was looking around that 49,000 area and then around 43,000 at that 50% if it kept going lower. But again, you know, it just depends on how this daily plays out as to whether that 38.2 is where we're at, or if we do get, you know, a further push toward that 50. I've struggled to try and find a 5-wave count because that would give us a complete wave off the swing low. I'm not able to make it make sense. So, you know, the best that I'm looking at is this is a wave 4, which gives us, you know, at least one more push up. Now, if that push up, if it's just minimal, you know, get us 95, 100,000, or if it's overextended and that could really, you know, shoot up, you know, 150, 200,000 even, depending on how it gets in there, you know, we'll have to wait and see. But the first thing is right now, see how the daily closes. Do we get a breakout above that 72,000 area? And if we're doing those two things, I mean, I think you'd be a fool not to look at 95,000, 100,000 initially. And then whatever else kind of maybe follows through after that.
Yeah, as a reminder for the audience, the 5-month average price is around $62,000. The lifetime value of Bitcoin since 2010, all purchases net of sales, is around 32,000. Correct me if I'm wrong, guys. I do make mistakes. I think MicroStrategy is around 37,000 and change and going up because he's continued to buy in the 60s. So it just tells you kind of like where the pain is. I think about 25% of the people are underwater. 75% of the people are in profit. My average is 40,735 and change. Like I've had a 50% move in my portfolio in the last 2 weeks. I'm not panicking. This is an awesome trade. It's going to allow me to continue adding in here. Look, I was expecting to add and raise my average. Okay. Literally, I mean, Sam's been with me enough now. He knows everything I'm telling you guys is like totally legit. I literally have been assuming that I had to add, like I sold 12.8 Bitcoin to give it to Trump. I will take the most expensive Bitcoin, and I have before January to do this. I will take my $69,000 Bitcoin. I will allocate those to the Trump trade, and then I'm going to be able to buy $54,000. Okay. So I am literally making $25,000, man. And I've told you guys over and over, hey, I'm going to double or triple my stack from here. I'm going to continue adding value, a price to the 40,000. Dude, right now I can actually buy in here and not really hurt my price too much, right? My average, which is, I guarantee you, Sailor's buying today.
Yeah.
He's buying every day. Doesn't matter what the number is, because he's buying volume and he's buying on an algorithm, and he's just buying the dailies, buying the minutes.
Everybody's in there. Yeah.
And sometimes I have to look at this when I'm in a trade and it's not going right. I have to look around at the other people that are in the same trade and go, okay, what do they know that I know that we all share that we could be wrong? And then also, how many times have these guys been right versus wrong? And am I part of a big macro, everybody's in this trade, or am I in a small little group of people who thinks we're a big fucking thing? But the truth is, Bitcoin is not a big community. Okay.
Yeah.
And when this thing takes off, this is what irritates me about the Bitcoin community. It's so myopic and insular. It has no clue how big this planet is. And I just see that everyone needs Bitcoin more than the little tiny group of people that are holding Bitcoin right now. That, like, quite frankly, we're pioneers. And in 10 years, like, our names aren't going to be anywhere, dude. Like, even Michael will get a ton of value out of this, but there'll be other corporations that do this, and you'll be talking about those corporations, I think. But hey, man, it could go wrong. I've never allocated this much time, energy, and money into one position other than my investments in building businesses. This is what it's like building a business.
Yeah.
You go for a year or two and you're like, oh man, we're the fucking best thing since sliced cheese. And then you meet a competitor. And then you meet a client who tells you you're an idiot, or you can't get that deal, or an employee steals from you, or you get a letter from some agency, or you get a divorce, or whatever, right? And then you got to start over. Well, guess what? This is the private equity thing, except you have no human error headaches. You have no buildings to have to go into. You have no tax to pay on anything as long as you don't sell.
Yeah.
And by the way, if you do sell, you do owe taxes. Problem if you're not doing that. And then you wait, man, and you keep putting time and energy into the play. The problem with building a business, you don't know if it's going to take you 3 years or 30. Yep. That is the spread, by the way.
Yep.
And Bitcoin, I can look at it and go, wow, every 4 years, never in history, if you hold for 4 years, have you lost money. I like that trade, dude. I don't know another business that has that. Like over 15 years, if you hold on for 4 years, you make money. I've never seen a business like that. Have you?
Yeah, no, it's, I mean, I think that's the big draw for Bitcoin, right? Is because over time it continues to go up, and yeah, we suffer through the big drawdowns that we've had in the past. But that's the price you pay for the big run-ups that you have, right? You can't have big run-ups and little tiny pullbacks. It doesn't happen like that.
That's right.
Flush
See,
the
that's a
market
big
out.
boy comment. That's a big boy comment. Can you say that again?
Yeah. So, if you have big run-ups, if you have big, significant, impulsive run-ups, you're going to have big, significant pullbacks. It's just the way it is. You can't have one, you can't have the first without having the other. You're not going to have the little small pullbacks. You have to flush the market from all the speculation, or, as much of the speculation you can. The people that are in for the quick money, the people that are in for the quick ride. That's what gets flushed out. If you're listening to this right now and you got flushed out on this move, again, not to be disrespectful, but this is for you to look back at yourself and really evaluate, is that what you were doing? Because the odds are it probably was. I know that's what I was doing when I first got into markets, 30 years ago.
If you get shook out of a market, you did something wrong. Period. Yeah. Okay. And I've been shaken out of markets before. Yeah. Your position's too fucking big, man. Okay. Yeah. Like I lost $120 million over a year once in a position I couldn't get out of. The truth is, I could have gotten out of it if I was willing to take the spanking that I deserved. I could have got out of it at 20 million loss. But me and the team looked at it and went, man, we're public company, dude. We don't want to report that motherfucker. And then we waited another quarter, and then it's 40 million. And then it's 70 million. And then by that time, I'm like so beat up, dude. I got my buddies in Houston going, let's double up. I'm like, fuck that, dude. Double up? I am doubling zero. We need to get out of this trade. It is so fortunate for this company that they had a guy like me that just looked at him and went, hey, I made a mistake, dude. We're on the wrong side of this bloody thing. We should have dumped this at 20 and 40. We ended up dumping the whole thing at 100, 120. But until then, I couldn't move, dude. I couldn't breathe. I couldn't put another trade on. I couldn't date another woman. I couldn't go to the bathroom, right? I was like getting slaughtered every day. 2 million down, 5 million down. It was literally, is Exxon showing up on Monday, or is it BP, right? Or Morgan Stanley, and they're going to just pounce on me because they knew I was sharp. The point I'm trying to make is this is a very unusual trade. Like that trade, I could never have stayed in. Like the time would have crushed me. This is a trade that I don't have to get overly excited about. And by the way, Exxon, BP, and Morgan aren't even in this trade yet. Yeah. See, I walked into a game where oh my God, everybody and their brother's in it, deep pool. And I got caught with my pants down. Yep. I did it a couple of times and they all said, oh, he's going to try it again. We're going to spank him. And they did. And that's cool. But like that, I needed to know I got spanked. I literally cut my hair really, really short. And I gave a speech to the whole industry. And I said, thank you guys for the haircut. And they loved it that I could, admit to them, hey, I took a spanking, but I'm still here. And now I'm going to, make up for the mistake, which I did. But I had to get rid of that baggage. And this is, well, dude, it was a bag. It was a bag of shit. And I just couldn't, you know what it's like though, bro. You can't get out of the trade. You can't do anything else. Yeah. And my point is the position is simply too large. Simply too large for the size of the market. And it happens. So if you're freaking out right now, just hire somebody like Chris, me, or somebody and say, hey, what did I do wrong? You did something wrong. The market didn't take advantage of you. Right? As long as you keep saying, hey, the market took advantage of me. Well, no, your position was wrong, dude. Period. It's just too big, or your wife didn't know about it. Now she's angry, or whatever it is. These are learning opportunities. You don't have to run away from the market just because you got spanked in 6 hours after a Sunday morning wipeout. Yeah.
Yeah. And that's important. I think what you just completely said there, I think just about anybody that's listening in, watching this right now or watches it later, they're going to feel that. Because when you're trading,
Grant's felt it before. Grant, you know what I'm talking about, boy. Grant just said he's seen me with my pants down on more than one occasion, I can assure you.
But this is, I think it's important that you said that, because even the money is not even the big issue. You're like 120 million, and everybody's like, oh my god, 120 million. But for somebody that has limited funds, it may be $1,200. It has the same effect, right? And you're frozen, and you can't do it because you're not getting out when you should have. Like you said, you look back and you go, well, I should have been out at 20. And when it was at 20, you knew you should have been out, but you continued to ride with it. You're like, oh no, I can't get out here. I can't say that we lost that. It's got to go up now. I swear to God, if it goes up, back up, I promise I will get back out. Just let me break even, right? I think everybody said that prayer there, even the atheist in the room. And at the end of the day, it's part of being a trader, right? I would never trust anybody in markets of any kind, just like in business, that say, oh, I've never been down. I've never had a bad day. I've never done a bad trade. I've never made a bad decision. Because I would be like, either one, you're full of nonsense, you're lying, or two, you maybe been pretty lucky. You came in the right time, the right area, everything. You haven't experienced a bad mistake yet, which means you are not prepared for the hell that's going to bring you. Exactly like you described it there. When you're sitting in that trade like that. So, yeah, I think it's important that you did say that, because I think a lot of people are going to feel that personally as well.
Well, Sam, how would you like to end up on this, buddy? Other than my normal statement, I don't want to take much of Chris's time. I think I've seen 4-hour sessions on this. I actually like the brevity of this particular session, not saying anything negative about the other guys, but I don't think there's, I hope we don't have a nuclear war. And otherwise, my position in Bitcoin, which will expand today, I'm not worried about it at all. But if we have a nuclear war, all bets are off. All bets are off.
But all bets are off with everything, right? So
yeah, I think my final concern is, what I iterated at the beginning with you, Chris, is this just a normal pullback, or is this something a little bit different, right? Is this a crack that will show to be a lot worse than some of what we've seen in the past? My gut feeling is that, we're on the march towards something bigger, and it makes me very nervous that this is all coming out of Japan. My hope is that you're correct and I'm wrong, right? Because I'm more on the emotional side than the chart side, right? So from just what I'm seeing on the emotional side, and what I also know about emotions is sometimes you have self-fulfilling prophecy, right? People, because they get emotional, want something to happen there, it does happen, right? Yeah. But easy scapegoat, time will tell, right? We'll just have to see what happens this week, and we might know by Friday whether this has been as serious as we thought it was, or if it really just was another pullback.
Yeah, 100%, man. And I think it's the best way to look at it is we had a big move overnight, no follow through yet. So we got to give it a little bit of time to play out. I think that might've been a good pullback and we might be headed up or higher. But as I've mentioned, here are the technical levels, as I've said, that we need to get above. And until we do that, there's still the possibility it could go down further. So, again, I think that's what we do this week. We kind of watch today's close, watch how things go. Do we get continued follow-up, or do we actually then get further breakdown? And that could give us a bigger idea of what may be going on overall. So, yeah.
Your summary, though, is that we could see 57 today. That would be really good. It would, if it got back to the 200-day moving average, that would be awesome, correct?
Oh, I would love to see a retest. Yeah.
Well, I think we will see a retest, or we're going to see a failure.
Well, but here's the thing, though. Again, with the size of the volume that came in on this breakdown, a lot of times we won't get a retest because that volume is so big.
Oh, really?
So many out. It took out so many breakdown traders and then flipped them where they're back. I mean, if you sold that breakdown, you're right now underwater. You're underwater right now. If you held that.
Like you got crushed in an hour, right?
Yeah. And so what happens if it's a big enough move like that? Often what you'll get is once they're finally convinced to get out of their backward trade or they get liquidated or whatever, they jump in long, and that just kind of fuels the continued push higher. So we may not get it. I would love to see it because that would be a sooner confirmation. The more this thing pushes up, the harder it is to get in because you're not getting that confirmation. So, kind of the catch-22.
Yeah, interesting. Well, guys, we're going to have to wait a few hours to see what happens. Chris, thank you very much. Sam, Thank you always for helping me. You're awesome too. I probably wouldn't be doing this if I had to do it alone. Chris, I don't know how you do it alone. It's too much shit, too many moving pieces. Plus, I like having an angle of the political side on it. It's been very, very helpful for me on the timing. So, guys, really appreciate you guys. Follow Chris. He runs a trading strategy and a platform, Texas West Capital. If you're a trader, check in with him. He's awesome cat. Honest as the day is long, I think, and trades his own money. So that's really cool. Follow Sam and I. We have spaces on Monday evening at 5 o'clock till 7, talking about Bitcoin, finance, macro, and some even soft subjects that have something to do with all that, making money and being successful. And we do the same on Thursdays, and then and have another live space here on, I think, every day right now. Sam,
yeah, we go live every day, and then we do Twitter Spaces Monday and Thursday.
Yeah, and we bring on people like Chris and others who want to chat. Happy to have my brother come on sometime. We'd love to talk about real estate. Maybe one day when I can pay him $100,000 for a 30-minute performance, he'll come on and talk to the little boy. But love you guys. While Bitcoin's getting crushed, if you bought it at 60 and you're seeing 51 on the chart, this is the time when you could go out, be really nice to somebody like you're a mega wealthy guy. Pretend like Bitcoin's at $540,000 today and go treat somebody really nicely today. Okay. Give them $10. Over tip your waiter. I don't know, the valet guy, your housekeeper. I don't know what you do, but like I buy Bitcoin for my housekeeper every month for her kid. Nobody knows that. I'm telling you, just like, so we'll be able to one day go, hey, how much was that for this kid? I think Sam met him. This kid, Mexican immigrant, dude. His mother was illegal at 16 years old. She came here by herself. She was going to die in Mexico, walked over here by herself. She's now legal. Her son's in private school. She's worked for me for 12 years. He's met Vivek. I could literally get the kid into politics tomorrow morning because he's such a cool kid. So this is the story about immigration and being immigration and also success. Like my family was an immigrant. And like, I see us being able to help people like this is a really, really cool thing. So I don't know how I got on my housekeeper, but be nice to somebody, okay, today, and don't brag on it. It's a really awesome life hack. I know, Chris, you've done it in the last week because you've been hearing this. You're like, that's a good little thing to do. It doesn't cost me anything, does it?
Do it all the time, man. It makes you feel amazing.
Good for you, dude. Thank you so much, guys. Appreciate it. Y'all be strong. Keep the diamond hands and listen to people that are more successful than you and have had more experience, and you'll do just fine. All right, guys. Thank you very much.
Thanks.
Dun, 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 dun.
Hey, Grant talked on there. He said set up a time and he'll do it.